Okay, here we are with section 2. This is covers financing. Uh, let's just jump right in. 2A, line 69, the pre-qualification and AAR, Arizona Association of Realtors, pre-qualification form is attached hereto and incorporated herein by reference. So basically this is saying we have to have a pre-qualification done. We can't just write a contract without a person being pre-qualified. And of course, unless this is a cash sale, but we addressed that in the previous section. Loan contingency. Buyer's obligation to complete the sale is contingent upon buyer obtaining a loan approval without prior to document conditions, or PTD, no later than 3 days prior to the close of escrow for the loan described in the AAR loan status update. Again, Arizona Association of Realtors. The loan status update is also called the LSU form or the AAR pre-qualification form, whichever is delivered later. Typically, we get the pre-qualification form up front and the LSU follows after that. No later than 3 days, this is bold, no later than 3 days prior to the close of escrow date, the buyer shall either A, or I, for 1, sign all loan documents, or 2, deliver to seller or escrow company notice of loan approval without prior to doc conditions, and dates of receipt of closing disclosure, or also called the CD, from the lender, or 3, deliver to the seller or escrow company notice of inability to obtain loan approval without prior to doc conditions. Okay, unfulfilled loan contingency. If for some reason the person can't qualify, this contract shall be canceled and the buyer shall be entitled to a return of the earnest money if after diligent and good faith effort the buyer is unable to obtain loan approval without prior to doc conditions and receives and delivers notice of inability to obtain loan approval no later than 3 days prior to the close of escrow. If buyer fails to deliver such notice, seller may issue a cure notice to buyer as required by section 7A, and in the event of buyer's breach, seller shall be entitled to earnest money pursuant to section 7B. If prior to expiration of any cure period, buyer delivers notice of inability to obtain loan approval, buyer shall be entitled to the return of the earnest money. Buyer acknowledges that prepaid items paid separately from earnest money are not refundable. Okay. As far as the interest rate and necessary funds or funds to close, buyer agrees that 1, the inability to obtain loan approval due to the failure to lock the interest rate and points by separate written agreement with the lender, or 2, the failure to have the down payment or other funds due from buyer necessary to obtain loan approval without conditions and close this transaction is not an unfilled loan contingency. So if for some reason the interest rate doesn't get locked on the loan, points are too high, something like that, that is not considered, and then the interest rate, let's say, goes up, you can't afford the loan because of the interest rate increase, that's not considered an unfulfilled loan contingency. So, and if you don't have the money to close, somebody, for some reason went out and bought some furniture or whatever, and now you don't have enough money to close, that's also not an unfilled loan contingency. So make sure you go over all that stuff with your lender prior to. Okay, loan status update. Buyer shall deliver to the seller the LSU with the minimum lines 1 through 40. We'll go over the LSU in another video. With minimum lines 1 through 40 completed, describing the current status of the buyer's proposed loan within 10 days after contract acceptance, and instruct lender to provide an updated LSU to the broker and seller upon request. Okay, loan application. Unless previously completed within 3 days after contract acceptance, buyer shall provide lender with the buyer's name, income, social security number, premises address, estimated value of the premises, and mortgage loan amount sought. And also grant lender permission to access the buyer's tri-merge residential credit report. Okay, those are all the things that the lender needs in order to have an official, what the government calls a loan application. Loan processing during escrow. Within 10 days after receipt of the loan estimate, buyer shall provide lender with notice of intent to proceed with the loan transaction in a manner satisfactory to the lender, and provide to the lender all requested signed disclosures and the documentation listed in the LSU at lines 32 through 35. Again, we'll go through that in another video. Buyer agrees to diligently work to obtain the loan and will promptly provide the lender with all additional documentation requested. So typically 32 through 35 is going to be like pay stubs, tax returns if they require them, W-2s, bank statements, things like that. Type of financing. Okay, this is where we check the box: conventional, FHA, VA, USDA. Assumption if you're assuming a loan, or seller carryback. And there's also a place for other, if financing is to be other than new financing. See attached addendum. So we have an addendum for financing other than new financing as well. Loan costs. All costs of obtaining the loan shall be paid by the buyer unless otherwise provided herein. And that would be under seller concessions, if any. Okay, in addition to the other costs seller has agreed to pay, sellers shall credit buyer, and we can put a percentage in there, 1%, 2%. 1% obviously would be $5,000 in this case, with a $500,000 purchase price, of the purchase price or a specific dollar amount, which are called seller concessions. The seller concessions may be used for any buyer fee, cost, charge, or expenditure to the extent allowed by the buyer's lender. So that's something that you want to talk to your lender about, is the seller concessions. What can they be used for? What do they allow? Changes. Buyer shall immediately notify seller of any changes in the loan program. So if you're going from a conventional, let's say, to an FHA, that can or even a VA, that can impact the seller. So we've got to let them know that change is happening. We've got to let them know the financing terms, or if you're changing lenders, described in the pre-qualification form attached here to, or the LSU provided within 10 days after contract acceptance, and shall only make any such changes without prior written consent of the seller if such changes do not adversely affect the buyer's ability to obtain loan approval without prior to doc conditions, or increase the seller's closing costs or delay close of escrow. So you can't do any of those without prior written consent of the seller. Appraisal contingency. Buyer's obligation to complete this sale is contingent upon an appraisal of the premises acceptable to the lender for at least the purchase price. So if the appraisal comes in low, we've got options. If the appraisal fails to appraise for the purchase price, in any appraisal required by the lender, buyer has 5 days after notice of the appraised value to cancel the contract and receive a return of the earnest money, or the appraisal contingencies shall be waived. So we can also reach out to the seller, say, hey, your house appraised for $5,000 less than what we offered you. Would you be willing to reduce the purchase price? And then we can enter negotiation. We need to do that negotiation within those 5 days, so that if they don't agree, if the seller doesn't agree to the negotiation, then we could give them that the cancellation due to the appraisal. If we go beyond that 5 days, then the appraisal contingency is waived at that point, and the buyer has to come in with the additional money. Appraisal costs. Initial appraisal fee shall be paid by the buyer, seller, and other. So just about any party can pay for it. Typically, the buyer, the seller pays for the appraisal. At the time the payment is required by the lender and is non-refundable. If the seller is paying the initial appraisal fee, the fee will or will not be applied against seller concessions at close of escrow, if applicable. If the buyer's lender requires an updated appraisal prior to close of escrow, it will be performed at buyer's expense. Any appraiser lender required inspection costs shall be paid for by the buyer. So that gets us through the financing section. The next section is section 3, and we'll go over that in a bit.